Hey everybody, Smart Silver Stacker here. Just wanted to weigh in real quick on the inflation data for August, which was released this morning. So far, markets are taking a beating after getting this worse than expected inflation data. The month over month inflation number was expected to decline by 0.1%, but instead, what we saw was an increase of 0.1%. And I mentioned in the video that I put out last night that if we got higher than expected inflation data today, that the result would be a sell-off across the board, including in silver. And that is exactly what we are seeing. The silver price down about 1.7% at the time I'm recording this video, although other asset classes are seeing an even steeper decline. All of the major stock indexes in the red. The Nasdaq's down more than 4%. And so, the 1.7% decline in the price of silver really isn't too bad when you consider the fact that we were up more than 5% yesterday. Still a pretty good start to the week for silver, but not so much for other assets. The market reaction to this higher than expected inflation data, again, is very indicative of the fact that fundamentals no longer drive price action in these markets, and that the only thing that investors are looking at is what the Federal Reserve has got up its sleeve next. Because the message that markets are taking away from this higher than expected inflation data is not that you should acquire assets which will rise in price, especially in dollar related prices as inflation climbs higher. Instead, these assets are selling off because what markets are interpreting this data to mean is that the Fed is going to have to get even more hawkish, and they're going to have to get even more aggressive in their fight against inflation. Next week, the Fed is expected to hike rates by another 75 basis points, which seems pretty much guaranteed with this higher inflation data. But what I do think markets are getting wrong related to this data is that they think that this means that the Fed is going to have to get more aggressive to fight inflation. But I really think the takeaway here is that the Fed is actually incapable of fighting the levels of inflation that we have, because they've already made a number of seemingly aggressive rate hikes. Although when you have a year over year inflation rate of 8.3%, when the federal funds rate remains far below that, it's hard to imagine how rate hikes alone are supposed to get the inflation problem under control. But, I suppose if Jerome Powell wants to give some more hawkish speeches, maybe we'll see another continued sell-off in assets until the market comes to its senses and realizes that the Fed is helpless in the face of this inflation. And these numbers are likely to continue to get worse regardless of the action that the Fed takes, because the Fed's hands are ultimately tied by the high level of indebtedness, by the inflationary fiscal policy of the government, by the continued deficit spending and increasing debts. They just can't raise rates high enough to get inflation under control. It's not just the rate hikes, there's also supposedly this quantitative tightening going on. And according to the most recent data from the Federal Reserve itself, the Fed's balance sheet has declined by less than 2% from the highs of April of this year. So, they're not really shrinking the balance sheet as aggressively as all these speeches and all this talk would lead you to believe. And I wanted to quickly take a look at some historical data related to the Fed balance sheet numbers and compare them to what we have going on today, because I think that this may actually illuminate for us somewhat what the Fed will be doing next and what kind of a timeline we can expect them to operate on moving forward. So the last time that the Fed wanted to shrink its balance sheet in a big way, they really started selling off assets back in 2018. And in January of 2018, the Fed balance sheet stood at about $4.44 trillion. And over the next 20 months or so, they began selling off those assets, and they managed to get down to $3.75 trillion by August 26 of 2019. And that was about as low as the Fed balance sheet got. Then we saw the reverse repo crisis, and the Fed had to go in and reverse the policy of tightening and begin buying assets again. And then we all know what happened in 2020, which caused them to expand the balance sheet massively. So this last sell-off in Fed assets from the Fed balance sheet took place over a period of about 20 months. It represented about a 15% reduction in the balance sheet, and that is when something in the market broke and forced the Fed to reverse policy and pivot. Now, will it take the same amount of time for something to break this time around? Well, I suspect that it won't because the economy is so much weaker today. We have this rampaging inflation. We have even higher levels of indebtedness. We've got all these supply chain issues. We have sanctions. The economy in general is on a much weaker footing than it was back in 2018 and 2019. So, at the very longest, if we take that 20-month time frame and we apply it to what's going on here, the Fed balance sheet began to shrink in April. So that would take us out to about December of 2023, January of 2024. So if history repeats here and the Fed is able to shrink the balance sheet for 20 months, that means a pivot is probably coming sometime around the end of 2023. But like I said, the economy is on a much shakier footing today. So I think it's likely that would be the very optimistic and best case scenario, that they were able to keep this up for 20 months. And I suspect that Fed pivot and something breaking in the market is going to happen a lot sooner than that. That is why I believe that pullbacks like today's in the price of silver and in other assets that will benefit from the much higher inflation that is coming down the pipeline, these pullbacks are an opportunity to acquire more of them because the handwriting is on the wall. And when markets finally come to their senses and realize what this higher inflation data really means, assets like gold and silver are not going to be selling off. They're going to be going up dramatically. So let me know what you think in the comments down below. Thank you all very much for watching, and I will catch you next time. Smart Silver Stacker, out.